Hello and welcome to BQ Prime. A very good morning to all the viewers. Clearly, a good Monday to start off with. We are above the 18,600 mark already in terms of Nifty 50. So that question of whether we will be able to cross that 18,500 hurdle does not remain anymore. So far as well. Clearly, in terms of the day's lowest levels is 18,584, which is still above the 18,500 mark. So it's going to be an interesting day of trade. The advanced decline ratio pretty much in favor of the bulls. And if you see Bank Nifty as well, we're pretty much at that 44,400 mark in today's session. So there is contribution that's coming in from the banking majors as well in today's session. Heavyweights are participating to today's rally, and whether that's going to translate into the mid caps and the small caps is also interesting because a lot of smaller names that have reported numbers and some good earnings as well coming in there. To discuss stock specific action, joining us on the show is Sunny Agarwal, Head of Fundamental Equity Research at SBI Cap Securities. Sunny, good morning and welcome to the show.
Yeah, thanks, Cyril, for giving me this opportunity. Good morning to everyone.
Always a pleasure. Sunny, my first question coming to you is overall, let's pick up the HDFC Twins. Good moves coming in terms of today's day of trade. What would you advise an investor to do? Because the next 4 to 5 weeks are going to be extremely crucial, taking the merger aspects into consideration.
Yeah, so definitely there is one development in HDFC Twins today that it's education loan business, which is HDFC Credit is on the block. And the valuation which at the deal is happening at around $2 billion. And apart from that, in next 4 to 5 weeks, we will see a merger happening between HDFC Bank and HDFC Limited. And due to that overhang, we are not seeing a much participation from HDFC Twins in the Bank Nifty rally. But what we feel is that it's a good opportunity to definitely add this stock in the portfolio because everybody knows that once both the giants are together, it will create a huge runway for the growth opportunity for entire HDFC pack as such. So definitely it's a good opportunity to add quality business in the portfolio with an investment horizon of 12 to 18 months and with a price target of 1,800 to 2,000 rupees.
Right. Moving on from other financial major, you have ICICI Bank as well as ICICI Lombard. Both of these are in focus. In fact, Lombard has surged almost 12 to 13% in trade as ICICI Bank has improved stake increase. What would this actually mean? Because clearly, initially, the conversation was basis RBI rules that ICICI Bank has to go ahead and reduce stake below 30%. But now they are increasing it already. So, I mean, how are you looking at it?
Yeah, it's a definitely positive from ICICI Lombard perspective because we have to keep in mind that most of the insurance policies nowadays is to the bank channel. And with ICICI Bank having a well spread out network pan India, definitely increase in stake by ICICI Bank in ICICI Lombard will be taken in positive sense. There will be a lot of synergy which will be driven between both the businesses. Having said that, despite of recent number posted by ICICI Lombard, we have seen a decent correction in the stock prices. So any evaluations were comfortable on ICICI Lombard. So both these factors played out for ICICI Lombard. And anyway, we have got a buy recommendation on both these names, which is ICICI Bank and ICICI Lombard. So ICICI Bank being that bank is leading from the front in terms of all the deliverables, any operating metric to pick, and ICICI Bank is leading at all the front. So definitely it's an add in the portfolio with a price target of 1100, 1200. ICICI Lombard, again, a very good business, one of the leader in general insurance space. So one can add that stock to in the portfolio. On deep, definitely today it has rallied much. On deep, one can add with a price target of 1300 to 1400 over the medium to long.
Right. Moving on, M&M is an interesting one to watch out for today. We did see a gap up opening. However, there has been an impact on the margin front, and that's because of the adverse product mix, skewed more towards auto OEM, auto versus the tractor segment, right? However, analysts are positive as well, and the clear indication that we're getting is that the auto business is going to be the key growth driver for the next couple of years. Taking the valuations as compared to peers into consideration, how do you keep M&M? Do you think it's slated for a re-rating in 2023 or that's already happened?
No, so definitely M&M is due for its re-rating. So if you see M&M, if I go back 2-3 years back, M&M has given a guidance that gradually they are going to reduce losses in the subsidiaries which are not profitable. And they have achieved this in FY23. And having said that, going forward, if you see the pipeline of electric vehicle which M&M is going to launch, so that will give a one more move of up move as far as the sale of automotive segment is concerned. The main profit driver of the M&M is definitely agri segment, which is the tractor segment, and everyone is watching the how the monsoon will play out in the starting June, and if that plays out as per the expectation, definitely M&M is due for the re-rating. Uh, Obviously, it's a slightly long-term holding stock. You have to hold in the portfolio for next 2 to 3 years, and we can easily see stocks scaling up to 1700, 1800 level.
Right, so that's with regards to M&M. Moving on, ONGC is in focus. In fact, one of the top losers today, they've posted a loss of around 248 crores, but that's on the back of a tax provision. Apart from that, they've also put out a date to start of KG gas, and they're seeking a $12 price. How are you looking at it?
ONGC, we always look at ONGC as a proxy play on crude oil prices. The way crude oil prices are falling consistently, currently trading in the band of $75 to $80. We would not like to go long on ONGC as such. It's a cyclical play. So rather than looking at various fundamental factors, what I would suggest is that one should correlate ONGC to the crude oil prices. Whenever crude oil prices are on up move, you can take a tactical trade in ONGC, enter and quickly book out. Obviously, in terms of valuation, definitely it's very cheap. And there is a reason for that, that government keeps on burdening all these OMC companies as well as upstream companies with a subsidy as and when there is an issue on tax collection. So that's one of the issues with all these companies are facing. Maybe with the election year ahead, I don't think so any big re-rating is due from all these upstream and oil marketing companies. So we would like to take a neutral stance and take a tactical trade as and when the crude oil starts.
Okay. Apart from that, you have Reliance Industries, which has really contributed to market up move in the last two sessions. Friday, it was one of the top contributors. Today, also, it's contributing quite heavily. A good investment opportunity at current levels?
Yeah, definitely. So what we have seen is that in the recent Nifty rally from 16,800 to 18,500, 600, Reliance has not much participated in this rally. However, having said that, it's a long-term story. So gradually we will see various businesses getting demerged. So we may see a listing of telecom business. Geo Financial Services already, the company has announced its intent to list that company. So that is one of the unlocking opportunity which we see in Reliance. Retail business is one of the business which will get listed over the next 12 to 24 months. So it's a more of an unlocking story as far as Reliance is concerned. Definitely add in a long-term portfolio with a price target of 3,000 or 3,200 over the period of 18 to 24 months.
Right, so that's with regards to Reliance Industries. Moving on to the broader markets as well, few names which have really done well is Balkrishna Industries in terms of earnings. What do you make of the counter, and would you recommend an investor to buy?
So Balkrishna, what we have seen that this quarter was very exceptional for Balkrishna Industry, and company has went on record to say that FY24 is the year where we may see 8 to 10% kind of revenue growth for Balkrishna. Having said that, Balkrishna has got a majority exposure in terms of business to US and Europe. And Europe is the segment where we have seen there was a lot of trouble because of the ongoing Russia-Ukraine crisis. So as the story unfolds, as we go ahead and see there is no recessionary narrative coming out of the Europe. However, having said that, Germany has recently went into recession. So again, it's the neutral view rather than Balkrishna Industry. I would like to bet on MRF tire or Apollo tire within the tire space for a short to medium term.
Right. Maharashtra Seamless is another one where we've seen a good growth coming in, at least from an operational perspective. Yes, the profits are down. However, they've declared a 83 crore provision written back due to amalgamation. And there is a deferred tax outgo for the period, which is almost around 11.5 crores versus a 5.5 crores. What do you make of the numbers? And clearly, they've elevated Anuj Kumar Jaiswal as the CFO.
Before going on to Maharashtra Seamless, I would like to say that the entire pipe segment, LSAW pipe segment is witnessing a very good demand environment. So other companies like Jindal Saw, or for that matter, Ratnamani, which is into the industrial pipe. So all this segment, what has happened is that because of the revival in infrastructure spend in United States, and at the same time increase in demand because of the Russia-Ukraine war, we are seeing a healthy demand from water and sanitation as well as oil and gas segment. So all the companies within this segment are doing well. You name the Jindal Saw, Maharashtra Seamless, and we are quite bullish on the entire segment. And definitely, Maharashtra Seamless is one of the story one can participate through in this sector.
Right. Sunny, how are you looking at the City Union Bank? Because clearly the loan growth has been tepid. There has been a decline in terms of the net interest margins as well. What's in store according to you?
So, City Union Bank has reported relatively weaker set of numbers. What we have seen, you have rightly pointed out that loan growth is not much attractive in a single digit. The CASA deposit has declined significantly. The cost of fund has increased significantly. Cost to income ratio has deteriorated. So, and that is the reason we are seeing adverse reaction in the stock price today. So, definitely, I would not like to touch the City Union Bank as of now. There are many other large cap private banks like HDFC, ICICI, Axis, for that matter, IndusInd, or somebody want to play that story through mid cap story, then IDFC First, Karnataka, Federal. So there are other better players in the banking sector which are available for medium to long term perspective.
Right. Sunny, one last counter I want to discuss with you is a Nucleus Software. Interesting, show coming in there, a robust fourth quarter, because of which, if you see in terms of Friday's session, also a double-digit close in terms of the stock price. Today, the stock is again locked in upper circuit. I think the stock's up almost 20%, if I'm not mistaken. How are you looking at a Nucleus Software?
Again, one of the strong set of numbers from mid-cap, small-cap IT company. So we have seen all the mid-cap, mid-sized IT company reporting a solid set of numbers, whether it is Persistent, KPIT, Happiest Mind, Nucleus. You pick the any mid-cap, small-cap company and they are reporting a solid set of numbers. So again, we are bullish on entire mid-cap and small-cap IT space. But having said that, Nucleus Software has run up significantly today. So it's better to wait for a slight correction and then probably add in the portfolio for long-term perspective.
Right. So that's with regards to Nucleus Software. Could be an addition to the long-term portfolio as well, as Sunny mentioned. Thank you, Sunny, so much for discussing all the counters that are movers and shakers in trade today. And it's an interesting day of trade with the kind of up move that we are seeing. A lot of impact or aid coming in from the global markets as well on the back of the US debt deal. But clearly it seems that this up move is probably here to stay in terms of today's session, at least with the kind of levels that we have been tracking. Thank you so much. Stay safe and speak to you soon again.